Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll share and interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's take a look and see what people are sharing. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, where we dive deeper into these topics, deeper into individual companies, and you can see what I'm buying, when I'm buying it, and the price that I am buying it at. So let's keep going down, see what people are sharing. We've got Bora Bora here. All the cycle guys are looking for lower silver and gold. In the precious metals newsletter world, at this point in time, only Oliver MSA is looking higher in the short and midterm. I am looking for higher in the short to midterm. And the only thing that would convince me otherwise is if we get a move in yields higher, which I don't think we will. So, in my opinion, I think we could see gold and silver continue to go up. I would be in the Michael Oliver camp and not from the lower, looking to go lower camp. And it looks to me that we've got falling wedges in both silver and gold in the short term that could break to the upside. And that's where I would remain bullish. I'm not trading the short term, but I am playing the mid to long term, and I am bullish on those time frames. Amy Nixon says, good thread breaking down Lenner's Q2 earnings. The takeaway for American companies, it used to be that the customer comes first. Today, the shareholder comes first. And I think that I don't like that opinion that she has there. The reason the company exists is for profits and for the shareholders. And yes, if they make a good product, people will continue to buy it. That is a free market based system and company. So just looking at Lennar's stuff here, it says, I think it's cute some people actually believe we can build our way to housing affordability. It's not going to happen. Lennar's Q2 earnings report provides a clue. Corporate home builders, the customers, aren't the buyers of the homes. Those home buyers are a means to an end, a thing that is not valued or important in itself, but is useful in achieving an aim. It says Lennar's Q2 average sale price declined by $23,000 from a year ago to $449. New order prices fell by $25K to $457. Lenner's gross margins ticked up slightly for the quarter to 22.6%, but here's the kicker. Lennar spent $603 million on share repurchases in Q2 of 2024. They should have allocated at least half of that capital towards some better homes in Texas. The tiny cement board boxes they are throwing up in the Texas market are just ridiculous. Basically, future rental stock for all the investors waiting in the wings. Well, I mean, that's his opinion, but if they can sell them and they're at those prices, what they should do is take the money and return it back to shareholders, in my opinion. It's almost like none of these people own any stock of anything. They're so, I mean, if they take the money and they put it towards the house, they're going to ask more money for the house. The market is subject to, I mean, everyone's subject to the market. And if the competitors of Lennar are building homes of similar quality, I mean, that's what the price point is. And if they can't sell the house for $600,000, $700,000, $800,000, then they can't put all the nice things in it necessarily. And maybe at the price point of 400, mid 400s, that's where the house is at this point. So I think it's kind of naive and ignorant to make comments like this, in my opinion. But that's just my opinion. So who owns the stock market? We've got households directly own 39% of U.S. equities market. So this is a ownership breakdown of US equity market. Households are 39%. Passive mutual funds are 6, ETFs are 8, active mutual funds are 12, and it looks like it's declining to some degree. Pensions and government retirement funds are 9% and declining. Foreign investors are really picking it up. Maybe that strong dollar has something to do with it. Hedge funds are 2%, business holdings 4%, and other are 3%. So households really taking a good share here at 39%. It looks like it's increasing quite a bit. So coming on down, we got Gary here, and I'm going to read this one. I'm not, not saying that Gary knows everything, but I do think that this is somewhat right. He says, if you're so inexperienced that you think you can generate income from a small account, you are well on the path to blowing out your portfolio. The best traders in the history of the world rarely ever average more than 20% a year. If you have a $50,000 account, can you live on $10,000 a year? That assumes you are one of the best in the world. That's below the poverty line. In order to do more than that, you will have to use leverage. If you leverage massively, you will blow out your account. Not maybe, you will blow out your account. You will blow out your account. It is impossible to win every trade. If you are leveraging heavily trying to earn an income from a small account, as soon as you miss one of those leveraged trades, your portfolio will go to zero. If you don't even understand what is possible and what is not possible, you have no business trading. There are times when all the odds stack up in your favor. In those periods, you can use some leverage. But those are few and far between. Most of the time, leverage is out of the question. If you're jumping around from one service to another, trying to find someone who's going to turn your $20,000 account into a $1 million account quickly, then you are well on your way to turning your $20,000 account into a $0 account. There is some merit to that. In the beginning, you should be focusing a lot on how to generate more income. That money should be reinvested back into yourself if you can do that. So if you have 10 grand or 20 grand or something like that, you can acquire more skills, you can get a license in something, do something where you can generate more income. Invest in yourself first. Once you get your income up, and depends on what you think your income is up is, I would say if you're single and you get it in the $80,000+ range, and then when you accumulate over time more and more capital, you don't want to be taking on too much risk and too much leverage. And putting both of them together it really is a bad mix to put too much risk and too much leverage together to try to earn your money really fast. The faster you try to earn it, the more risk you're willing to take, and you start to adopt gambling mentality. And the gamblers generally walk away from the table broke. So I agree with the majority of what he says here. And in the beginning, I think the biggest returns that you can get is investing in yourself to generate more income. Once you generate more income, then you start an approach and a strategy of approaching the markets a certain way where you can build wealth over time and not take on too much risk. The whole name of the game is to reduce and eliminate as much risk as possible, and then look for symmetry in the market and be patient enough to let the symmetry work for you. And then you can spread out amongst 7 different sectors or something like that. And then these sectors will pop off at different times, leading to what hopefully is kind of a steady moving higher portfolio. Then you can also invest in dividends. And then the dividends start to snowball, where you invest a certain amount of money in a company, their earnings continue to go up. They pay larger and larger dividends to you. And we're in a lot of those companies and in a lot of those sectors that are earning more money, paying larger dividends. And then over time, and this is going to be over quarters and years. They're going to earn more money, you're going to get more dividends, and it could be substantially more dividend payout from your original purchase price, which could be years ago. So you could be sitting on 50, 60, 100, 200% gains while also getting very large dividend yields. That is kind of what I think the market can support and for a realistic outcome. If you have an unrealistic outcome trying to, turn $20,000 into $1 million account in a very short period of time, you're basically playing the gambler leverage, huge leverage in gambling, and that generally ends up with a bunch of tears and a zero. It really does. So I'm not saying it can't be done, but in the beginning, the major focus should be in generating income to add more money into the account. If your goal is $1 million or whatever it is, then you can push some of the portfolio with full-on risk stuff if you want. But I would have a good chunk of it in as low as risk as possible with the most return that you can find. It's that risk reward balance that you're balancing, and push that button as hard as you can. And I do that on the website. I try to look at the best risk reward. I think in the beginning I was probably pushing a little bit too much risk. I wanted people to get really good returns, but the best way to do it is to balance that risk reward and to get a high probability of success and favor that probability. Tavi says, wouldn't it be classic if oil breaks out from one of its most bearish positionings ever after also forming higher lows? That is highly likely to happen if you ask me, and I'm in that camp as well. I think oil prices are about to break to the upside. I think they look fantastic. Coming down, we got a nice chart. This is the U.S. LNG export capacity through 2030. We can see here we've got a massive move higher starting in Q3 of 2024. And guess what? That is right around the corner here. And then we basically go on up, 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 up for a lot more LNG capacity. So that's what we've got in store for LNG, is that big move in capacity coming for America. And by 2030, it's going to be plus 20 billion cubic feet per day is the difference from where we are today. Now try junior gold equities, and someone was making a comment that gold equities are the cheapest they've been in over 40 years. Most gold equities deserve a trade at a discount to NAV. And then if you look at the junior gold miners, you have a huge discount even to the senior gold miners. So some of these juniors, I think the best value in the market could be SILJ, SILJ, and the silver junior companies are probably the cheapest of anything. There's also obviously some very good value in oil and gas because what you're paying for that value is really low right now. It's a really good deal, in my opinion. And SILJ, I think, is also another one that is up there. LNG investor Wood Mackenzie says, we expect a pressing need for additional supply beyond the current wave. Delays in U.S. LNG investments due to DOE's pause in non-FTA approval and the time required to develop projects elsewhere will result in supply growth slowing significantly beyond 2029. So this is going to be a pretty long growth phase for liquefied natural gas and natural gas in general. I'm a huge natural gas bull, and I think that's really the sector that will have some of the largest growth in the world to generate electricity and also used to heat homes. I think this is going to be a huge opportunity for investment here is nat gas and LNG. Investment wisdom, Peter Lynch says, there's no such thing as a worry-free investment. The trick is to separate the valid worries from the idle worries, and then check the worries against the facts. And that's what I do a lot. I just check the macro conditions because I think a lot of people worry about the macro environment, more so because commodities are so subjected to the price of the commodity going up and down. So a lot of those worries are coming from the big macro picture and from the real estate cycle. And that's where I share my worries as well. Eric says, who knew everyone would be so depressed with oil near $80 a WTI and energy stocks beating almost every other subsector in Canada? The biggest divergence in some time between sentiment and reality. And that is free cash flow is what he's talking about there. Warren Buffett says, until you can manage your emotions, don't expect to manage money. I agree with that one. Your emotions are going to be throwing you all over the place, sentiment-wise. All things LNG. Here's a forecast from Baker Hughes for LNG. It says Baker Hughes estimates a 3.5%. It's basically CAGR, that's your growth rate, for LNG from 2023 to 2040. That puts the demand for LNG around 2030 to be over 600 MTPA. To serve that demand, Baker Hughes expects that LNG liquefaction capacity should go up to 800 MTPA, assuming 75% of liquefaction capacity will be used to serve 600 MTPA demand. The current utilization rate of the LNG plants around the world is about 80%. The total current liquefaction capacity is a little less than 500 MTPA. So in the next 6 years, according to BH, forecasts 300 MTPA of liquefaction capacity should be added to serve the demand for LNG. So we've got big moves going up for LNG capacity here around the world. And then we've got LNG capacity outlook. And this is kind of what the capacity looks like for 23, for 24, and then the big move up all the way to 2030, which is a gigantic step up in installed capacity for LNG. And that's where all that investment that I'm looking at for natural gas, that's where I'm looking at. It's like, how can I partake in some of this? And I'm playing it through the natural gas price and the equities, not so much by shipping it, although you could play that as well. Still sitting on wads of cash. So Americans have hoarded cash. This is the U.S. household's balance sheet, checkable deposit, and currency. And look how high this is, guys. We're up at like over $4 trillion. And back in 08, 07, I've seen this before. It was under $500 billion. I mean, we have so much cash and checkable deposit compared to what we used to have. It's quite crazy. Coal still accounts for a staggering 50+% of China's total electricity production. And remember, they've been adding a lot of capacity here. So it's not like China's electricity consumption is going down. It's still going up, but it's going up slower than some of the other portions of electrical generation that they've got going on. So it's still a major portion, though, over 50%. Housing June 17th weekly update. Inventory is up 1.5% week over week, up 37% year over year, just to get that information up. But we are getting a little bit of increased active inventory, and we'll see how that works its way out over the next, over this year. We're still below 2015, 16, 17, 18, 19, and even below 2020 still. And those were all up years for real estate. Uranium miners did 580% in its baby bull move, but the big move is still ahead of us. And I'm just trying to get you guys a reminder that we are still in this bull market for uranium. It says volume is thin, zone all the way up, means no historical volume resistance going back up. It is going to fly. We've got a rounded bottom arc cup that we are working out of, and everything is a-okay. So don't get too discouraged. Be patient, hold on, and let it go. Printer does not go burr anymore, but it does. Janet is duration managing U.S. debt by shortening tenure of calendar. Banks are buying equals monetization. Just ask Milton Friedman. So we are still printing more money to buy these short duration bonds, and money printer goes burr. Another Peter Lynch quote says, if you can find a company that can get away with raising prices year after year without losing customers, you've got a terrific investment, according to Peter Lynch. And I agree with that. According to logic, I should say. This ratio chart is more than clear about where the potential is now. Historical, massive asset paradigm shift incoming. Silver is most probably the most undervalued asset there is. Be sure to reserve the right seats before the main ride starts. And at this top, silver was 50 bucks. His price target for silver at the end of this bull market is $370 an ounce. It could go double that if silver goes ballistic at the end of the bull market. And he's got silver divided by SPX, the ratio, and is a double bottom. And we are going to come up from that double bottom. It's going to take some time, though. It's not going to be super quick. It could be quick once it goes. It says that is a 40-year base. The longer the base, the higher in space. ADX to all-time high against the SPX, and the SPX could fall while silver goes up. We've got Scott here. He says uranium, Sprott Physical Uranium Trust at support in the Livermore accumulation cylinder. And there's that cylinder that we've got going on. And he's got an overlay on top of it. I don't know what that fractal overlay is, but it looks like it matches quite well. Probably Apple or something like that. Warren Buffett says, before looking at new investments, we consider adding to old ones. If a business is attractive enough to buy once, it may well pay to repeat the process. And I know a lot of people do this. You know, there might be good companies already in your portfolio that you should be adding to instead of trying to add new ones. I call this, this is what I say. We're not collecting baseball cards trying to buy the entire set. We're trying to collect the best players where the cards could be worth the most in the future. Michael Jordan rookie cards and Ken Griffey Jr. rookie cards and stuff like that. Maybe not all the players to get the full set. Grady says that's a perfect blue Livermore accumulation cylinder on silver daily chart. Ignore green cycle notations and just compare touch points with the gray image. It says if this pattern plays out, silver will explode from around here. The setup is there. Now we watch. So maybe we get a big move in silver in the short term. I'm bullish on silver. I'm not waiting for some correction, guys. I think it looks good. I'm in it. I'm ready to win it. Lennar Corp. So Lennar, a home builder, ranked number 126 in the Fortune 500. New home orders by quarter. So look at these new home orders by quarter. Quarter 2, 2019, 14,500 homes. In 2020, it was 13,000 homes. 21, 17.1 thousand homes. 22, 17.7. 23, 17.8 thousand homes. In 2024, quarter 2, 21.3 thousand homes. This is the new home orders at Lennar, a home builder ranked number 126 on the Fortune 500 list. Does this look like a slowdown to you? Does this look like a real estate crash? Now, if your inventories aren't skyrocketing, these homes are getting sold. So I think this looks pretty bullish. And you know what that means? That the expansion phase of real estate is alive and well. That's what that means. That those real estate guys that are all bearish are wrong. That we're still in this expansion phase and it is accelerating. And we could go to an overbuilt state, but that might take a year or two. Keep that in mind. And then a year or two after that, we might be 4 years from the end or 5 years from the end of this big cycle for commodities, for the business cycle, I should say. Prices at the pump are still too high for many Americans. We're going to drill, baby, drill. We're going to bring down your energy costs, says Trump. And if Trump gets in, we might be doing some drilling. Might be good for energy service companies if he does. Says Shell doubles down on natural gas by purchasing Singapore's LNG trader Pavilion. The Pavilion trades and ships LNG in Asia and Europe with a portfolio of about 6.5 million tons per year. Shell sees LNG demand rising by 50% by 2040 amid a shift away from coal. So they're stocking up, getting ready for this big natural gas boom. I think that's where the opportunities are, guys. I think it's nat gas. Long the Magnificent Seven remains the most crowded trade for the 15th consecutive month and is now the most crowded trade at 69%. So, and that's where you don't want to be. You don't want to be where everybody's at because that's where the sellers are. And that sentiment can shift very quickly. We've got the restocking cycle of the car industry for platinum group metals will be glorious. So McKinsey, 46% of US EV owners want to switch to ICE vehicles June 17th, 2024. That is ridiculous, guys. 46% of US EV owners want to switch back to ICE vehicles? Why are EVs so bad? Lee Lu says part of the game of investing is to come into your own. You must find some way that perfectly fits your personality. And I've talked about that too on the website, where you got to be buying stocks and you got to be looking at companies that fit your risk profile and your volatility that you can handle. Totally agree. We've got Berkshire Hathaway has now bought Occidental Petroleum stock for 9 business days in a row. Warren Buffett purchased about 3 million shares of Oxy between June 13th and 17th for 176 million bucks. Berkshire now owns about 29% of the oil and gas giant. We've got Lennar, another one says Q2 new orders rise 19% to 21,293. Remember that new home sales aren't even at the tech recession levels today. Not the highest bar ever to work from. And we've got a lot more to go to the upside, most likely, in this. Calvin says, watching every... Oh, so I've already talked about that one last time. So we're going to end it there, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. On the website, we do have a question and answer session on Sunday, 5 p.m. again. Can't make the Saturday one. Got something going on. So 5 p.m. Sunday is the question and answer session. It's all updated on the website if you go and look, and we'll see you there if you got questions. All right, guys, we'll catch you later. This is Finding Value.